All right. Good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today, we're going to take a look at Bitcoin. We're going to look at indices. We're going to look at some bonds and a few other things. Sticky inflation is what everybody's been talking about. We got the news talking about a hard landing, soft landing, zero landing. Everybody's opposite on their biases. A lot of people are bearish, a lot of people are bullish, but nobody knows what's what. So yeah, it's kind of one of those markets right now. As far as what I see overall, like long term, there's nothing to be concerned about just yet. The S&P 500 has absolutely been trading sideways. You can see that down here on the bottom right hand corner of your screen. Multiple days trading inside of this box here. It would suggest that it's looking more and more like it wants to roll over and pull back and find some support. You can see that you are still trading well above the yearly opening range, which is bullish for now. Right now, currently on the day, you are trading at the lows at an old resistance that did in fact act as support 3 days there in a row. Then we got a bullish push, and then we're right back down there revisiting that level to see if any demand kicks up there. And that's currently where we sit on the S&P 500. Your volume is gaining as far as your volume nodes intraday at what roughly looks to be around 4,065. Naturally, we know that professionals do not take sell trades at the bottom of a daily range and into a potential support. So currently what we have on Bitcoin is yesterday we took out August's high. That's a very important thing because that high, if I get over here on the monthly chart, you can see that high is the last high to clear right there before the massive drop from 31.9. So in a sense, your next monthly area of liquidity would be all the way up there. So as far as a liquidity search goes in the marketplace, this is the next area, right? On a monthly basis, that's a pretty good distance away. So it's only normal and natural that you would have profit taking occur at this area. And as we know, profit taking is usually in the form of selling. So that brings supply in at a crucial level. And then the current month's low is 23,769. You're still green on the month. You have 11 days on the close. You're still currently trading above monthly resistance. But intraday, you have made a potential bull trap. And what I mean by that is you have closed above intraday resistance. We have intraday resistance sitting at 23,852. You did break and close above that, just short of taking out the high of day at 23,917. Now, this is Coinbase's data feed. So on other exchanges, you may have already liquidated today's high. Let's go take a look at a few of them. I use Bitget. There is a referral link in the description if you are not a U.S. citizen and you would like to use them. If you do, please use referral code XTSC. That is X-Ray Tango Sierra Charlie. I would greatly appreciate it. But on Bitget's exchange, you have already liquidated the day's high. On Bitstamps data feed, you have liquidated today's high. You did that on this hourly close above resistance as well. But you can see this bearish candle right here took out the low of that. And typically when that happens, we get a little bit anxious, to say the least, because there could be a short in the play or in play for today. Longer term, I am bullish on Bitcoin. We think Bitcoin lows are in. We got long on Bitcoin on January the 1st. That is down here at 16,530. That is where we took long entries. So naturally, the further it goes up, the better for us in those long entries. But I do leave one account open to take on intraday opportunities. So intraday, I'm a bear or a bull, whichever way price is going to go, or whichever way I think price is going to go. Now, the rejection on the daily time frame, once you took out August's high, was clear and decisive. It ran one way, ended up making yesterday, which was a nice bullish day, into a bearish one. Although that doesn't look like a terrible close in regards to the previous bullish day, it is what it is. It is a rejection at a current swing high. So, like, if you were looking for bullish entries today, the price that you would have been looking for those entries would have been yesterday's close. And this is yesterday's close right here. So that's the area at which you would have been looking for entries, right in there. So your bullish entries already happened. I would not suggest looking for bullish entries up here. The bad part about the short, is all three of your major equities, your Dow Jones, your NASDAQ, your S&P 500, are all three trading at the low of day. So we typically don't like to look for fresh shorts at daily lows. You're not trading at the exact low, but you are trading below today's midpoint, and you are red on the day. So typically you look for sell side continuation in that type of scenario, but like I said, you're at potential support. So let's get over here on the big screen real quick. Good morning, everybody. Good morning. Good morning. Sorry about not having the normal live stream for the public yesterday. I had technical difficulties. That is why we are doing it today. We usually do not do public live streams on Friday, but I could not get everything working properly yesterday. So here we are. All right. First, I'm going to pull up the US 30, which, if you don't know, that is the Dow Jones Industrial Index. This is just the CFD. Basically, you can see that it has been choppy and range bound for multiple weeks here. I'll pull up the weekly chart, and you can see basically once you broke out above resistance here, you've been sideways ever since, making higher lows, higher lows, higher lows, higher lows. Yesterday or this week, you made a higher high finally and was rejected. So it's a sideways market. Here is your yearly open on the Dow. So you're not trading that far above the yearly open. In fact, you're not even 1% away from being bearish on the year, once again, for the Dow Jones. If we go to the daily time frame, pull up all the major moving averages, you are, and well, let's say you were structured bullishly, you still are in a sense to where all the moving averages are situated bullish. They're all trading where they should be, but you can see that you are currently trying to lose the daily 50. Sorry, I had to make sure I got Bitcoin pulled up on the other screen so I can monitor that as we discuss this stuff here. So, I mean, as far as we don't use the moving averages as support or anything like that, it's just a trend identifying tool. And you can see in a choppy environment, it doesn't even really help identify trend. So basically, we have a very sideways market, and we have been sideways for a while. But as far as structured bullishly, this asset has been structured that way ever since this day here, when your 100 finally got back above your 200. On the weekly time frame, you can see that you are indeed structured bullishly as well. 200 way down here, 100 here, 50 there, 20 there. So you are still structured bullishly, and I put more weight on the weekly time frame than I do the daily, especially when it comes to moving averages. But the only one I really care about for the near term bias is your 21. So as long as you're trading and closing weeklies above the 21 exponential moving average on the weekly time frame, you are still bullish and you are still able to look to buy potential support. All right. Here you are with your, let me get rid of all these. We just care about the 21 on the weekly. Here you go with the NASDAQ. Same scenario, breakout above. NASDAQ was the last one to get a sort of bullish rally. You can see multiple weeks of straight up. Then last week was your first pullback. This week, you're trading inside of last week's range. We did get CPI this week. However, the CPI came in hotter than expected simply because the BLS changed the way they interpret the data. I would be interested to know what were the CPI numbers going to be if they didn't change the way that they were going to start interpreting the data. Would it be lower or higher? That's what I want to know. I don't have the know-how to do that. But if one of you all do, I would love to know, did it come in hotter than expected using the old way? On the actual chart itself, it hasn't changed. Let's go over here and look at the inflation rate. There you go. So last month we had 6.5. This month, with the new way of doing things, 6.4. So they're calling that sticky inflation. It is a tick lower, so I don't understand what all the hoopla is about. But one thing that I do know about news when it comes to Bloomberg, CNBC, MSNBC, Fox Business, all of those major places where you would be getting your news from, they chase price. So basically, they have an agenda, and their agenda is to bring you the news. And if you notice, their bias changes on a day-to-day basis. Yesterday, they were extremely bullish. Today, we are bearish across all three asset classes. So now they're extremely bearish. I mean, so you'll see this overall narrative inside of those news places. I tend to ignore what they're saying. I watch them to get the basics of what the hedge fund managers and everybody else are thinking, right? Because I want to know, is the street overwhelmingly bullish or is the street overwhelmingly bearish? And as of right now, the street is overwhelmingly mixed. It is roughly 50-50. Basically, they don't know what to do. We've never seen a time like this before in anybody that's alive's lifetime, where we had high inflation and good jobs and all that stuff all at the same time. So basically what the market is being traded on is anticipation of the Fed continuing its interest rate hiking cycle. Now the Fed has done nothing but say this, and they have been saying it from day one. This is their projected target, and they will continue to raise interest rates until they have a solid data that shows inflation is trending lower across three major sectors that they are looking at. So far, we see that inflation is trending lower on one sector, but the jobs market and the other sector it is not. Inflation is still reading hot. So they are going to keep raising interest rates, and as long as they're going to keep doing that, that makes people very bearish. So it makes them run to bonds, yields, stuff like that. Here are your treasuries. You can see having a very fantastic month, or 30-year government bond yield, sorry. You're setting really close to 4%. You can see the last 3 days you've gotten a boost to the upside, currently trading above your yearly open. Same with the 20-year, currently testing yearly open, 10-year above, 5-year above, 2-year well above. The inversion, the 2-year, 3-month inversion is still there. Everybody's calling for recession, and as long as there are recession fears in the marketplace, that's going to drive bearish pressure. The thing is there hasn't been bearish pressure in the market. It's been bullish. We've been in a buy the dip scenario, and we currently still are. Bitcoin is trading up on the day 1.58%. Typically, you don't want to look to short days that are up. Here is your intraday. So what was showing a potential trap is now signaling a potential move higher. So what I'm saying is wait for the data to show us what it wants to do. When I say the data, I mean price. Let's let Coinbase clear the daily high and see if it gets a bearish reaction from there. If you do get a bearish reaction from there, then I'd say you probably could look for lower prices on Bitcoin today. If you do not, if you continue to make higher high, higher low, then this will just be a pullback to support, right? And you won't want to be looking to short that. It is 9:20. We have 10 minutes. Anytime you're trading near the high of day, close to the New York Open, I tend to get very skeptical of that, right? So what I'm going to be doing is I'm going to be watching this price, 23,917 at 9:30. I would like to see how price reacts at the open. Do you get a push above and then an instant relapse back under? Or do you get a push above, a strong push above, and continue to push higher? If that's the case, then it's going to be a no trade day. Here is your weekly range. Currently, you are bullish on the week. Very bullish. That is a bullish engulfing candle. Here is your CMEs. This closes today. You will be closing, unless you have a very big down day, a bullish engulfing weekly. You do have a gap down here. I am aware of that gap. Here are all of the gaps on the CME chart that are currently unfilled. These are the only three. All right. There is the run above the high of day. right now, and you are rejecting. Not a massive rejection, but it is a rejection. And it happened before the market opened. So 10 minutes before the market opened. So now we can watch hourly resistance on a closing basis. There's 37 minutes left. Since this is a breakout above this resistance here, you have to watch this resistance as you are currently making higher closes and higher bearish closes. That is, it looks bullish for now. So yeah, I think this may be a trap. To the upside, we shall see. So current trade setup would be you could look for entries roughly around 23,873. Though your stop loss above today's high, but you're still a little early, in my opinion, because you have not had the New York Open yet. But your bearish target would be simply a 2-to-1 risk to reward. But you're not going to get a 2-to-1 risk to reward. You have a support level here and a support level there. This is yesterday's close. So looking for a 2-to-1 risk to reward off of something like that, that would put you down roughly close to yesterday's close. So something like that. So what I would do if I were to take this entry and I was looking if price does work or if it does reject and we do get that bearish push, I would be looking to take first profit target would be 23,636 as that is the midpoint of today and support, right? That's what I would be looking at. So it would look something like this here. Now, if this was to hold, that would be a little bit better, and it would absolutely make your risk to reward a little bit better as well. Bringing that profit-taking area above this demand zone, right? But like I said, technical analysis, it can show you where you're looking for entries and what time you're looking for entries and things like that. As of right now, it is not a short because you did close above resistance. This was resistance. It is a close above. Okay. Typically, what we want to see on bearish days is we want to see a run above the high and then an instant close back under the support. Or if you do get a closing candle above resistance, we want to see the very next candle show us a trap. And we got that here. So we're getting a bit of a mixed signal right now. And when you have a mixed signal, you just want to sit on your hands, correct? If it's not an exact perfect signal, which is what we look for because we're snipers, we don't take entries when everything isn't lined up perfectly for us. And remember, everything else is trading on the lows. So if these three markets were trading at the highs the same way Bitcoin is, and we're making runs above the highs the way that Bitcoin is, and rejecting, that would be a better short signal. But Bitcoin hasn't been trading with the risk markets as of late. It's been trading on its own merit. On bullish days with the S&P 500, we've seen Bitcoin be bearish. And on bearish days with the S&P 500, we've seen Bitcoin be bullish. So right now, Bitcoin seems to be trading pretty much on its own. So we can only use the information that Bitcoin is providing. And right now it's showing you with this close above resistance here, with this bullish almost engulf, a short is very risky. You got 3 minutes until the open. So wait on that at least. But the setup would be typical, like what I just had there. Like that's what you would be looking for, right? Be looking for entries roughly around in there, and you would be using the high of day to be that risk. But you were told by the price that you should wait. You shouldn't do anything. You should sit on your hands. So that's what I've told my members to do. Basically, just wait. Is there a bullish trade to take here? No, there isn't. This thing is very oversold. I mean, very overbought. Yesterday, it had a fantastic run right into August highs and a rejection. Here is your oscillator. Down here would have been the area for the buys, right? So let me just pull something up over here. Just give me 1 second. Oh, goodness. Let's do this. Pushing back down to this old resistance level. So if we were to pull back, I think that we could pull back all the way down to 21,831. That is a significant level as it is a weekly close. Going down into the daily time frame, you can also see how on this day right here, your expansion day, it basically makes this resistance line the midpoint of the breakout candle. That is typically a legit level because you. All right, so that's the last upload that I put out 2 Saturdays ago. This is the level 21,831. So this is the area that I have specifically said a pullback to. We pulled back to the area. Notice how you made daily support at the area, just under it, but it's still in the same vicinity of that price. This is the area at which you would have been looking to be a buyer. Okay? That's how that works. You look to buy support pullbacks in uptrending markets. And make no mistake, Bitcoin is trending up, and it has been all year. Regardless of what everybody is saying on the news, regardless of all the bears calling for 10K, that is the fact. That's how you trade. You buy support in an uptrending market. In a downtrending market, you sell resistance, right? You can see it all the time play out perfectly. You're trending lower, you sell pops in price. Resistance, you wait for it to hold, show you that it is indeed holding. Then you look for those short entries time and time again. So as of right now, on the year, you're up, you're looking to buy supports. That was the level. This was the area to look to be a buyer. You do not want to be a buyer at the highs. And since, like I said, since Bitcoin seems to, it repriced in the correlation back to the risk markets from the FTX debacle, but we already discussed that months ago. We were talking about that. That already happened. And since that's happened, you've got people that are going to FOMO into the asset. You also have people that are going to take profits. So you just kind of have to wait. You can't buy highs. You got to buy support. The only trade is to be a seller right now, unfortunately. But just because there is no buy trade, that does not mean that you instantly go out there and look for shorts. There isn't a short trade to take. We do not have a clear and obvious short signal yet. You are making a fresh daily high as we speak. So had you taken the entry after the hourly candles told you not to, because it closed above resistance and did not follow through with the trap, so there would have been the trap, you would not have wanted to see a push above the original resistance. When you get a trap, you do not take the trade unless the original resistance holds. You are not holding. This is not a short. Clearly. Daily res, though, that might be a different story. If you get up here and you reject, then maybe you could potentially look for short entries. I still say that the trade is in a short, but for intraday opportunities, maybe it holds up there. But you got a lot of bullish momentum in today's market. You have plenty of room to go before you're even going to be considered overbought intraday. So it was a mixed signal today. It is a Friday. The fact that the risk markets were trading on the lows was the reason why I wasn't really wanting to take the short, right? You are at clear and obvious support. You can see all these wicks down here. This is support. You just have to find the support. On the daily, you've taken it out. You have an old support over here. I don't like to use old levels. I like to use fresh ones. You just don't have a fresh level of support, right? Not on this asset. Nothing. You took out last week's low. And as long as you close under here, you're going to be a bearish engulf. You took out last week's high. You just took out last week's low. So maybe an intraday bounce from there. There's last week's low. Then you have intraday consolidation. And at the open, you're getting a push. Bitcoin pushing up. And the S&P 500 pushing up. S&P 500 has an old resistance level that could be looked at as support. It held as support for multiple days here. But like I said, Bitcoin is doing its own thing. It's up 3% on the day. Here comes daily res right now. This is going to be daily resistance. Could this area act as resistance? Yeah, it could. It absolutely could. It's an old level of demand, and it could absolutely act as potential resistance. But I mean, do you want to short that momentum? That's the question. Not a lot of clarity out there in the markets. The most concerning thing for me is that we are getting bullish momentum on the dollar away from the yearly opening range. However, we are coming into an area of resistance for the dollar. So you do have this sort of breakout that is occurring. You're trading into an old support zone. This was support, support, support. There's your breakdown. You retested it here, failed. There's your push down into monthly support. For the last 3 weeks, you've been trading straight to the upside along with bonds and yields, right? So I'd like to see a test of 104.93 and a failure there. Show me that this is going to be a bull trap, if you will, right? Because although, the US dollar and Bitcoin do not trade inverse one another, they do trade against one another. But you can still have Bitcoin move up with the dollar, because if Bitcoin is stronger than the dollar, even though the dollar is moving up, Bitcoin can still move up, right? You can get that on all of this stuff. What matters is which is stronger, Bitcoin or the dollar. I don't have anything like that would show you what is stronger. This right here will show you that the USD currently today, as of right now, is the strongest currency across the board for currency trading. So for Forex. So, naturally you'd be looking, or earlier on in the day, you would have been looking for dollar long positions on like pound dollar, Aussie dollar, especially Aussie dollar. Aussie dollar is known as a risk on, risk off asset, or risk on. So like, if it is going to be a bullish dollar day, this is the asset that you would most likely be shorting. Here you are pulling back into the yearly opening range. So this could ultimately be an area of support for the Aussie, and you could ultimately see this thing go back to the upside. Or, since sticky inflation is the biggest risk for 2023, we could have a sideways market all year long. It's going to be a difficult year. So do it the easy way, right? The easy way is to just kind of sit on your hands and wait for the clear signals. When you have them, then apply risk to the markets. Let's see how the dollar closes relative to 104.49 as well as 104.93. And then let's see how it acts next week. Let's go see how Bitcoin reacted around its yearly open last year. All right. Last year, this is Bitcoin's 2022 open. When you got the open, you traded lower. But it was also 2022 was a bear market. The bear market actually started in November 2021, but 2022 was a bear market. You traded mostly sideways until March, right? March. We are currently in February. Now, I don't expect it to play out exactly like this. I'm using this as an example to show you that it takes time sometimes for these signals to play out. But we were bearish when we came into this. This community was looking for shorts because Bitcoin could not get any clear bullish momentum away from its yearly open. Even after making a fresh yearly high, it rejected that fresh yearly high and never went back to it. So this is when you started to get that bearish signal, right? Right here was the signal. This was your fresh yearly high. Boom. Then you made a continuation candle. Bullish continuation rejection. Traded back up into supply multiple days before ultimately breaking down here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days you traded in and around, up, down, and through your yearly opening range. 10 days. You see what I'm saying? So now you have a clear and obvious push above yearly opening range on the DXY. Been trading at it. 1, 2, 3, 4, 5, 6, 7, 8, 9. Now you're starting to push away on day 10. So are we going to get a signal soon on for bearish continuation on the dollar? Because let's be frank, if the dollar is trending lower and Bitcoin is stronger than the dollar anyways, that would only help Bitcoin's strength to the upside. If Bitcoin's strength starts to slow or starts to wane and the dollar starts to gain strength or gain momentum, bullish momentum, it will in fact put pressure on Bitcoin. It is a fact. They trade against one another. Bitcoin is traded as a currency, not a stock. BTC, USD. That is no different than Euro USD or Aussie USD, right? It's the same. Same exact thing. So this would be the next major area, key level to watch moving forward. You have taken out all your intraday resistances with massive strength. Now you're starting to get a pretty big bearish push on the SPY. Same thing on the Dow. NASDAQ, fresh daily lows. So if I was going to take the Bitcoin short, basing on that level there, stop loss would be high of day. Stop loss would be high of day. Let's see if it gives us one final push back up into this area. And let's see if this 5-minute level here holds as resistance, as that would be the last supply. Will you get a retest of this price? I do not know. And will that hold? I do not know. It's looking pretty weak. Looking really bad now. So ultimately, it was a front run on the high from daily res. You didn't quite get a test of it. You got 11 minutes on the close. I do not think you're going to get back up to this area in order to take an entry. But you never know. Let's see what happens. Where is the last bearish close? Here. So we could potentially look for shorts around 24,112 and target 23,781. Dollar had a pretty vicious pullback for a little while, but the dollar isn't into any resistance levels either. Yes, it is. What are you talking about there? Clearly holding as resistance, resistance, resistance. Breakout, close above, right back down as a rejection. Next intraday support there. It's a bearish engulfing 4-hour. Bitcoin is back under its resistance. Random market violence. Eight minutes on the close. Anything under this is going to be looked at as very bad. But you're probably not going to get a retest of that. So you almost would have had to just catch that on the way down. Love they can change the rules anytime. Yeah, anybody can. Your streams are so fun when you're not a bear. I'm not a bull or a bear. I mean, ultimately, I'm bullish on Bitcoin because it's showing a bullish signal off the lows, right? We had a ton of accumulation going on down there. So, I mean, it was only natural to be a bull. You can be a bear on day trades, but right now, I mean, according to most of Bitcoin's on-chain data, you definitely don't want to be a bear. Not ultimately looking for like 10K or something like that. No. We were, see, this is the thing. We were bearish up here and in here. That was the short. Those were the areas to short. You don't want to be a short seller at the lows, because basically what you're doing is you're looking at an asset that's already declined off of the highs 70 something percent and looking for fresh shorts. That's when retail generally gets really bearish, right? That's when you need to switch up your bias. We were bearish up in here when everybody else was still really bullish. We were waiting on that yearly open test. We were waiting for that fresh yearly high to short it because we wanted Bitcoin to come down here and become undervalued once again to be a buyer. And we've been buyers since it got into the green zone. No one could have foreseen the FTX debacle, right? No one could have foreseen Luna either, but it happened. So that Luna ultimately it was the driving force that pushed Bitcoin into the undervalued region. But we stopped being bears in here, and we won't be bears as long as price is down in here. But this is where most of my audience gets confused, is because when they hear me talking about taking short positions, they think that my overall bias has changed from bullish to bearish, or that I'm a flip-flopper. But ultimately what they're just not understanding they're just not understanding me, I guess. I'm not making my point. My point is I am buying as much Bitcoin as I can, or trading to make as much Bitcoin as I can. So that way, for the next bull phase or the next bullish market cycle, whenever that ends up happening, I will be well positioned at the lows for that. And we were well positioned at the lows. But as far as intraday short opportunities, you know what I'm saying? That's different, because I'm trading Bitcoin on an inverse swap contract. So if I take a short position on Bitcoin and my short position ends up paying me, I am being paid in Bitcoin. So on KuCoin, I have three futures accounts: USDT, USDC, and then ultimately the inverse swap. I use those three accounts essentially to accumulate more Bitcoin. So I can be bullish today and then bearish tomorrow on my intraday scalping, but on my investment strategy, I am as long as you can be, right? So like, to put it in a term, as far as like, say, in a stock portfolio, let's use Tesla as an example, right? Because Tesla is a volatile stock. It moves really fast, really far. You can make, or you can either make or lose a lot of money day trading Tesla. We know that. So ultimately, I can be long Tesla and then still buy puts, right? Still buy puts to make money on the intraday volatility. And then once that trade is done, or once I close that position down, even though I'm still holding my long stock, the money that I made from buying puts, once that settles, that just makes me have free cash in the P&L that I can then turn right around and use to buy more shares at a support, like when it pulls back into support. Does that make sense? Or it's the same strategy as being long stock and selling puts lower than my long stock position, right? Or selling calls. You would be selling puts, but it's just essentially making as much Bitcoin as I can without physically taking my money and buying it. So when you take your money and you buy Bitcoin, essentially you're risking your money, right? The money that you use to purchase Bitcoin. So when you take your fiat, you turn it into either just buy Bitcoin outright. That means you're risking whatever money you use to buy Bitcoin with. And I'm not risking any money at all. I am only risking unrealized P&L. That is Bitcoin itself. So ultimately, the first time I got introduced to Bitcoin, I had to buy it with my money. But once I found a platform that had the inverse swap contract, I was able to trade, make my money back, take my money out of Bitcoin while still owning Bitcoin because I had it in the inverse swap contract. So now all I do is I trade Bitcoin, the intraday volatility on Bitcoin, because Bitcoin is so volatile. When I'm right, I get paid in Bitcoin. Once that account gets substantial enough, I then move it into cold storage, meanwhile leaving a little bit still on exchange, so that way, if something tragic happens to the exchange, the only thing that I'm losing is what little bit of unrealized P&L I still hold on the exchange. If Bitcoin goes to zero, the only thing I'm losing is what unrealized profit that I have in Bitcoin, because now the portfolio is 100% only realized profits. So all of the Bitcoin that I hold currently, none of it is with my money. That's me hedging my downside risk on a very volatile asset. Everybody should treat Bitcoin like that, especially if you have the tools to do it. Instead of investing your hard-earned money into a very volatile asset, and also not only that, you also have to trust the exchange as well. So you're putting double the amount of risk on your money at the same time, because you're trusting an exchange that isn't backed by anything. Who's to say that that exchange will even be around tomorrow? FTX is a perfect example of that. People putting their life savings into Bitcoin, they're doing it because a lot of people during the last bull market told them to do that, right? And back here, things were different. The Fed was propping up the markets. Now the Fed isn't propping up the markets. So now Bitcoin is very risky. Ultimately, I believe it's still going to go higher. And I want to own as much of it as I can possibly get. But I want to own it in unrealized profit and loss. I don't want to own it in natural hard-earned cash. In fiat. Because I am not a Bitcoin maximalist. I don't believe Bitcoin is ever going to essentially be the world reserve currency. Not in my lifetime. It may ultimately in the future, but I don't see that happening in my lifetime. Fiat is going to be the currency. Wherever you live, that's ultimately going to remain to be the number one currency. Maybe times change, maybe something is invented to where Bitcoin transaction speeds are much quicker and things change, but as of right now, it's more or less a store of value, and that's how I treat it. But I love trading its intraday opportunity. I mean, this thing can move literally 10% in a day. Like you just seen a massive move take place on it. And here you go. It's pushing right back up again. Right? Nowhere else can you get that kind of volatility. And it happens quite frequently. That's a 2% move. Boom. Right? You can essentially double your money on that move with the amount of leverage that these places offer. So S&P 500 essentially made a new low of day, and you're seeing buyers step right back up again. Was that a fresh weekly low? It was. You took out last week's low. That's why you're seeing a bounce. So the next area that if I was a bear on the S&P 500 that I would be targeting now would be down here. But I wouldn't be looking to take a fresh short here. I want to see how price reacts there. Because you just liquidated that. So now the next area to look for liquidations is up here, right? That's only on a weekly time frame though. Intraday or daily time frames, each day's high acts as liquidity as well, same as the lows. That's why retail is constantly getting stopped out. Because they don't understand that what the market is doing is it's searching for liquidity. It's searching for supply and demand. Always, constantly. Fresh swing lows, fresh swing highs. Right? Here's the low. It took out that low. Left this high intact. right here. On this day, you push down, you take out this low right there, here, boom. So the next area of liquidity the market's going to search for will either be this low or this high. So it goes down, takes out this low, and reverses. Takes out this high. Then this becomes the next area of liquidity. And it got it there too. Then over here, got it. So then all the way up there, because this candle, this one candle, cleared all of this liquidity out, all of it. So then what does it do? There it is. Boom. It gets it. That's what the market's moving for, looking for continuously. So after you take out a swing low like this is why that strategy even exists, as far as the strategy that I call a liquidation break. You liquidate, then you break away and search for the next area of liquidity. If it's going to be a trending market, then it's going to look for liquidity lower. It's going to keep looking for it lower if there's more supply in the market than demand. It keeps looking for demand by taking out lower lows. And it will keep taking out lower lows until it finds the demand it's looking for. But on a weekly basis or a monthly basis, the next high is here because you didn't take it out. Here was the low. It's gone. You've gotten it. So now we will have to determine as traders, where is the next target? Well, we know where the next two targets are. The upside target's going to be 41.76, or the downside target's going to be 39.93. And we can watch that relative to where and how it trades back and around this week's open, if it even gets back up there. Next week, right? Next week, if this acts as resistance and price ultimately rolls over, then the market will be more than likely looking for these lows here. Bitcoin has taken out a big level in August's high. Right there. It also took out, well, that's not a month. Let's go to the month. Right there. Look where your next monthly high is. All the way up there. This is where your next low is. So on a longer term scale, Bitcoin does not have to go up here. It does not need to, there is no more liquidity to search through up in here on a monthly time frame. The next area of liquidity to look for would be here. So depending on how we act when we get to this area will determine my near-term bias. If we get back under the monthly open, it's looking more and more like the market is probably going to reach for this swing low instead of this swing high way up there. This was a key swing high. We have been watching it for a long time. We also got short once we took out this swing high. Once we did that right there, we got short at Trade Talk. We started looking for the lower liquidities because we knew that that's a big jump to have to go up there, right? But it does it on a daily basis too. Like I said, it does it on all the time frames, daily, weekly. So if you're looking for the next daily liquidity level, so you got that yesterday. And the reaction you got wasn't good. It wasn't terrible, but it wasn't great. So where's the next daily liquidity pool? All the way up here, man. 26,869. This was the area to search for liquidity. Today got it already. So now this would move over here like this. And to the downside, this. It's confusing, but once you see it play out over and over and over again, you start to understand it. The problem is for us as traders is determining where is that near term, like what is price looking for, right? Is it looking for the highs or the lows? If it's looking for the highs, then we can target those. If it's looking for the lows, we can target them. We're not always going to be right, especially if a market starts to trend. If that market starts to trend, then that tells us that there is way more demand in the market than supply. So we typically want to be looking for those swing highs to be taken out, not the lows. And we take this all the way down to the lower time frames, and we nail some of the best trades just by doing that. Right? Just by doing that, what I just discussed. We don't use terms like order blocks and stuff like that. Other YouTubers have coined because it's all garbage. The market is an advertising tool. These candlesticks are advertising tool. They're to make you FOMO. That's what they're designed to do. They want you to FOMO into it because these are designed to advertise price, and it's to prompt a move out of you. It needs you to provide that liquidity. And not just you, bigger investors, everybody that participates in the market is liquidity for the market. So we coined a term on this channel. We call it random market violence. That's when the market doesn't have any clear objective in mind, right? When it just goes all over the freaking place. It's not trending, just chopping back and forth, literally whipsawing people out of positions. It's crazy. It's difficult. Day trading is the hardest thing in the world to learn how to do and to learn how to do successfully. It's going to be based on you attempting to do it once per day, right? Is my advice to you. You find an area that you think it's going to turn, you take your trade there. If you get stopped out, you eat that stop and you wait till the next day. You know the best times to trade. I've told you. You know the best areas to look for those trades. I've told you that too. So knowing those two things will give you an edge. But how you use that edge will determine whether or not you are profitable in the long run or not. Thank you, PK, for the super chat, my friend. I appreciate you. Sometimes price will do exactly what we want it to do, right? Sometimes it does exactly what I want it to do. And other times it does not do anything that I want it to do. But I don't force my will on it, right? If it doesn't do what I want it to do, then I simply take my loss and I wait till the next day. Because ultimately, I do know by looking at past data that ultimately it is going to pay off. And ultimately, I will nail a position that will destroy that one or those two losses, right? That's basically how you grow a portfolio. But intraday volatility, it can be very, very difficult. Now, looking at this, look what you did. You took and made a massive big run up above the high of day. Then you took out this high. And then you retreated all the way back down to and closed under resistance. So now this becomes the operating range. Right here. Unless, of course, you take this out and close and go back to the upside. But we know where daily resistance is. It's right there. If it continues to make its push, that's where it's looking to go. It's going there to test for demand or supply, whichever is there. We look at Glassnode, we know that there's not a lot of people buying these prices. See all the accumulation on the lows? That's accumulation. This is not accumulation. There has been not much accumulation happening up here, even though price is continuing to run up. There's not a lot of accumulation going on, according to the Glassnode's metrics. They take data from all exchanges. All exchanges. Well, the bigger ones. And that's how they come up with this data. But there has not been a whole lot of accumulation going on up here. So, expecting a pullback is only natural. We got a pullback here, and then out of the middle of nowhere, boom, big move to the upside with very little accumulation occurring. And here is your short liquidations. The orange is the liquidations. Would I call $33 million a lot? Not really. But obviously, that's where the market wanted to go. Let's back it off 6 months. So this big spike here didn't liquidate as many shorts as this spike did. Where long liquidations are occurring on the moves lower. So you liquidate longs here on this move lower, and then you get this move higher to turn right around and liquidate shorts. I can't see very far or how much leverage is out there, but typically this leverage will move higher, and the higher it gets, the more volatile price will get. And you can see since the 17th of January, after a lot of liquidations of the move higher, that's going to be your short liquidations, your leverage starts to grow more and more and more. And that's leverage on both sides of the market. That's not just leverage on one side, it's both sides. Open interest has remained relatively. Here's your put to call ratio. It's only natural when price moves higher that your put to call ratio starts to go up, because more and more people start buying puts the higher price gets, to either A, hedge their long position, or B, just to outright short the underlying. But your open interest has been pretty much all in all staying flat. So a lot more people are using futures to do exactly what I'm doing, to be able to trade the volatility intraday while maintaining my spot long position. It allows you to hedge your losses. That's essentially the area you want to see it stop if you want to short it. And down here is where you would be profit. Your target has to be. This is the operating range here now. Boom, boom. S&P 500, a lot of volatility, down, up. So the volatility just liquidated the opening on the SPY. There's your open on the SPY. There's your high of day on the SPY. You move down, you set a low of day, then you come up, you liquidate the high of day. Now, for it to move lower and liquidate the low of day would not be surprising at all. In fact, I would almost expect it. Markets like to play games. So this is why I look at higher time frames, right? Just to give me my next targets. Next downside target for the SPOOs or the SPY, $400. Upside target would be there. So all in all, since this week, you've been trading inside of it. You're trading inside of this week. Because this week's high of 418.31 is still intact. This week's low of 428 is still intact. So the last 2 weeks, you've not been trending. You've been sideways. Just choppy. What you did just do, however, today was took out last week's low. So now do we figure out, is the market going to run up and take out the highs, or does it want to look for lower prices? Does it want to find a lower support? The way that I tend to do, or the way that I look at these things, like I said earlier, is my bias will be in line with the weekly 21, right? As long as price is trading and trending above this yellow line, I typically look to be on the buy side. I'm typically looking for areas of potential support to be a buyer. Because the market if it's going to trend, then these are the areas that you'll see your trending opportunities to take place again. But if a market is choppy and sideways, this indicator will hurt. It'll hurt you bad. As you would have been a buyer here, when this market pushed down to it here, you would have wanted to be a buyer there. And boom, it pushed well under it. Traded above it here for several days probably. And then boom, took this out. And then just kept going. Till ultimately it found enough demand to turn right back around and start attacking each one of these highs. Just put more emphasis on your near-term wicks. That's why we say wicks are targets, not support or resistance, because it bounces after taking out a wick, It doesn't mean that wick is support. It just means the market took out that liquidity and is now in search for liquidity towards the opposite direction. This week, you took out a major swing high and this swing low. Found support at support and started to rotate back higher. So in the grand scheme, you're still trending higher, even though you've been pulling back for the last 2 weeks. So you typically want to be on the buy side. You just want to do it at either areas of liquidity runs or areas of support. Here's your trending moving average on oil. Nice big move to the upside, taking out what? This week's low here, right there. Boom. Took out that liquidity, then rotated back up. Didn't close or take out this liquidity until this week. Got it. Now it's rotating back down. So is it going for this? Only time will tell. Oil has been very choppy. It will break out of this range eventually, and when it does, you can expect a pretty decent sized move. But as long as it's trending under the 21 and it's under the yearly opening range, not last year, this year, then you want to be a seller. At resistance or at areas of liquidity. Yearly opening range. Got above it here, stayed above it briefly, rotated lower, smoked the liquidity to the downside, pushed back up, tagged the yearly opening range, rotating back lower. But on the weekly, your 21 is still above price. So you would have been looking for shorts. There, or here. Those are the only 3 areas you're looking for entries. That's it, nowhere else. And if you eat a stop when you take the entries at any one of those 3 areas, then you just got to wait till the next area is tested or until you fall back under the original area you were looking. It's difficult. But like I said, this is a very bullish candle. It is not bearish. Not bearish. So trying to short it just means that you're essentially on the wrong side of the market. there's just not a buying opportunity to take because you're into potential resistance. If you want to be a buyer, you want to see how price reacts here, as that's bearish closes are your supports. So this is the close. It's also today's open, but on today's open, at today's open, you pushed down, made a low of day. Then you became bullish, traded up away from the open, and then at the London session, you traded down to the open where you found support. Then you made a higher support here. This was resistance until you took it out there. There's your resistance. Bearish candle trades down to where? Support. Next candle opens, pushes down under the support, and then straight up. So you can see how your daily is trending up. It's not trending lower. The daily range is trending higher. And that's why, like, you really only need to watch these numbers. Percent change. That lets you know right off the bat if the asset's bullish or bearish on the day. Right now, Bitcoin's up 2.4% on the day, and we know that can change. It is definitely struggling a little bit. There is not a lot of volume coming in at these higher prices. These volume nodes are tiny. Down here currently is your point of control. So we know the most of the volume in today traded at 23,745. $23,745 is what? Nothing there. Nothing there. Nothing there. Nothing there. Oh, but what we have here. It's amazing that your point of control, where most of the volume traded today, is at the support that was made after your London session. Check the open of the day. This is where the majority of the volume happened. That's your point of control. Intraday on the 5-minute time frame. There's your spike to the upside. So this is your operating range. Closed above. Closed back under, so it looks bearish, but man, that's volatile. Watch how it closes today around resistance. This is your resistance. If you test this price and fail, then you can start looking for short entries. But still, I mean, you don't really have a good trade setup because that wick is so big up there. So you already know that the market has the ability to trade back to there at least. That's why we set those rules. That's why we make them. It keeps us out of trouble. If I wanted, what I wanted to see for a short, especially once this occurred, I would not have wanted to see price get above that. That's where I would have wanted to see, like on this candle, I would have wanted to see price tag that and then start to roll back over again, showing me that this is a trap. Once you get above it, then it says something else is going on, right? Especially because you closed above resistance. Look at like a bearish day. This is why I also want you guys to get off of the 5-minute time frame. There's your close of the day. Open of the day. Here. And even then, at 10 o'clock in the morning, you just get this big, massive spike to the upside. Bullish trending day. Look at your bearish trending days. How that works. Just pick a random day. Here, for instance. Here's the open of this day. Right? You take out the previous day's resistance with this closure. You run above the high. Then you reject back down. So now this becomes your resistance. You're just simply watching this area. There's a breakdown. So now if you're looking for short entries, you would be watching that break down. You did test it to perfection. And then you broke down. So here's resistance. If you're going to continue to be bullish, then you need to see higher closes. But you're making what? Lower closes. Sets a support here. You get a bullish bounce. Close above, close above, close below. So now this becomes resistance. This is support. Nope. Close above. Close below. Close below. Close below. Close below. You see what I'm saying? Like, it's much easier to see the day when you're watching and waiting for your hourly closes. And you're in a bearish market. You're not in a bearish market anymore, folks. Made a fresh high of day. Did you get a resistance test? No. But you're beyond anything that says you should be looking for shorts. You still haven't closed above that 5-minute supply candle, but you tested well above it, making a fresh daily high. So that's how many times have you made a fresh daily high since last night? Once, twice, 3 times, now 4 times. So if you keep taking the short entry and you keep putting your stop above the high of day, you're going to keep getting stopped out. Lovely. This thing already tested its open right back up to the daily open. Volatile. Choppy. We need a pullback on Bitcoin. Again, you can't be a buyer on Bitcoin till you get a nice pullback. It's got to set a pullback in stone. It's got to put in support. It needs to test that support and hold that support. And then that's where you're looking for your entries. If you're bearish, you're watching for resistance levels to hold. But if you keep making higher and higher closes on your days, then you're not really wanting to short that, are you? So like I said, wait. If you want to be bearish, wait until you get back under that. This thing down here. Because it clearly holds price when it's bearish. You're above it. When price is trading above it, it's not bearish. That's a big, strong week. Once again, you do got gaps down here. And you could get, like next week, you could get a bearish week and fill that gap. But I wouldn't take a short based on the gap. Because you got a gap up here, too, that still has to be filled. You got another gap up here. See that? That's a gap down. There's your gap. So don't trade for gaps. Gap fills. They do often get filled. It's impossible to know. Like I am guaranteeing you the reason the size of this candle is so big is because of how many people shorted this week looking for this gap to be filled. Because that's what retail teaches people. Nope, reversal to the upside. So someone told me that this is not a short squeeze. They are wrong. It is a short squeeze. Anytime that you get a big opposite direction candle, that is a squeeze. That's exactly what is occurring. You are squeezing people's positions out. The reason this candle was so absolutely monstrous to the downside is because it's squeezing all the longs. Everybody that got long in here, this candle squeezed them all out. That's why it's so big. But gaps only happen also because this market closes. Right? They're not that important, in my opinion. Not on Bitcoin, because Bitcoin's spot market trades 24/7. So those gaps don't even exist on this chart. They don't even exist. But the liquidity pools do. Use wicks as targets. Not resistance and support. Glad you're keeping well, Mr. Heath. It took some back testing to make some notes to understand what you had been saying. The whipsaw almost looks like FOMC day price action. Yeah, it's a lot whipsawy. Very strange. Like I said, guys, it's going to be difficult to get into good positions, real easy ones, especially intraday, because the street is so mixed. Volatility, it's going to be volatile because you got people making intraday decisions every single day based on the news, based on new incoming data. New data is coming in almost on a weekly basis, right? Important data that everybody is watching. They're watching for the jobs market to start. They're looking for unemployment. They want to see inflation lower. I mean, that's what's driving investment decisions right now. And naturally, that's going to cause a ton of volatility. And it's been difficult trading, but this position was simple. And that position is still open. I'm still holding it. Still holding my USD JPY short, right? But guess what? It's getting into an area now where I have to start seriously thinking about doing something with that position. This is a very big expansion on the week, a very bullish expansion on the week. So I actually thought this resistance here was going to hold. It did not. It's at an area of inflection now. So I'm not going to do anything to the position yet. But next week, if we close above this and this, then I may very well have to make an adjustment to that position. But as long as we're trading under it, I will not touch it. In fact, this may be an area to start looking to add to the position. We got a daily resistance right there, 134, 467. Depending on how today closes, will tell me what I'm looking for next week on this. I may add to the short position here. On the daily time frame, you can see that you've already changed your trend. Right here was the trend change. Because if this was going to be a bull trap, it should have rolled over and started its downside descent. However, it did not. It went up. This is the yearly opening range. So as of right now, this thing is bullish on the year, bullish on the quarter. There's a big level up there to watch as well. So it's one of those things, right? If my short position is wrong, then I'll make adjustments. But I haven't seen anything yet that tells me that I'm wrong. Look where you are on the weekly. Right here. This is going to be a quarterly supply zone. But I think if it's going to roll over, right here, it should do it. If it doesn't, if we get a weekly continuation candle like this next week, then I'll probably cut the position down to half. Get ready for positioning myself bullish again, the dollar. But right now, we still got time. There's your dollar position. Once again, like I said, when you're in a trending environment, this thing will be a very good indicator to watch. Sometimes you don't trend, and when you don't, it's difficult, right? It looked like it was going to start an uptrend here, but it didn't. It broke back down. So price action can take a long time to actually get situated. This is a weekly chart. So right through here, there was quite a bit of time there. $133 days, 19 weeks before we actually had a pretty good idea what was going on with the dollar, right? So you haven't missed anything on Bitcoin yet. You haven't missed anything yet. This thing's pulling back. So if this is going to be the prevailing trend, remember, this is the yearly open. So we're just now starting to play around with that. But we're still under this. If it's going to resume its downtrend, then this will be an area where people start to look for shorts on the dollar again. And if they're wrong, you'll get a big expanding candle to the upside because it'll squeeze those people out of their position. Right? Because trust me, people are shorting the dollar today. They are shorting the dollar today. I know it for a fact because this morning, you were trading above 104.50. Now you're under it. So people are taking positions here for the prevailing trend to continue. And that prevailing trend for, since this week here has been to the downside. And we want to stay on the side of the prevailing trend. So we are trying to find long entries on the euro. I have taken several positions on the euro, and I have made money on the euro, but all of the positions have been stopped out. Right? Because liquidity keeps searching for demand lower. So today's the first day where it actually looks like, there's some real stuff maybe happening here. So I will continue to look for bullish positions on the euro while everybody else is bearish the euro. As long as we're above this, the prevailing trend is up. Some people use trend lines. If you use trend lines, then to you, this is broken down, right? If you use a line chart, it broke down a long time ago. It broke down here. But I don't use trend lines. I use the moving averages. They're just better. LDO USD hit a high of $3. East staking alternatives are a hot narrative. What if you get a lower high retest under 400? Under 400. So you must be talking about the SPY. Would that be a buying opportunity? Is that what you're asking, or just what happens if? Well, it all depends on what the people that are trading it, what they do. You've already gotten a test under this liquidity. So if it continues to push lower than what it's looking for is $400. I would still say that is potentially a buying opportunity all the way down to 398.50. It's under 398.50 where I would start to change my bullish bias. And it wouldn't change all of a sudden because, as I've shown you, it takes time sometimes for price to really give you a clear directional bias. This is pretty clear because, now the moving average is trading is above this area here. You can see how it started an early uptrend there, then you lost it, right? This was just a bear trap that literally took 4 weeks to play out. That bear trap was such a good bear trap that look how far of a push up you got. Everybody thought this was it. This was the end. Bear market 2008, here we come. But it stalled out at support. Their support. A close under that wick, this wick right here, once we took out the liquidity here, closing under it would have had me targeting this candle's low before looking for bullish entries, right? Because then that would have been suggestive that it was searching for this low. Even though I know this is support on a closing basis, closing under this low would tell me that more than likely the market was looking to push here. It didn't. It closed back above that low. This week, you didn't even take out that swing low and still closed back above this low. This was the low where the liquidity was. This was the third test to push under to take out either one of these two lows. Unsuccessful. And then you closed bullish again on the close. So back above here, this low, bullish close. You should no longer have been looking for shorts at that point in time. And especially on this week. This week put you back above the 21 and showed you that anybody that got short from the open of this week or lower, they were stuck. They were being stopped out. They were being squeezed out of their positions. Price moved higher. So, I mean, getting a lower test under 400, do you close under 400 or what, right? It's going to matter what happens. Do we close today under this wick or what? What do we do? If we close today under 405.07, then I will be looking for potential bearish entries and I will be targeting $428. A close above this, however, tells me I gotta wait before I can look for day trading opportunities lower. But I would, like I said, I would much rather be a buyer. So instead of even taking the short trade, assuming that this is the target, I might wait for this to get hit and then become a buyer, depending on if price shows me that there is in fact demand there. A tag of this level would be a phenomenal place to be a buyer. But by that time, by the time price gets down to 398.50, if it's even going to get down there, this moving average will more than likely be above it. So it'd still be a good spot to be a buyer unless you close a weekly under it. Then it starts to look bad again. Things start to change around again. This will start to look like a bull trap again. But this isn't a bull trap. This was a bear trap. So you're in a BTFD market right now. The problem is it's just been chopping around, being sideways and hard to deal with. And Bitcoin just made a fresh daily high again. So remember what I said. Just last 5 minute period, you just made a fresh daily high. So stop trying to short it and using the daily highs as your risk. Because as you can see, this thing is clearly stopping you out again and again and again. So stop doing it. You take one chance at it. If you're wrong on the one chance, you're done for the day. You move on. You wait for the next day. Because then what you need to see is, how does it even close? How does the day close? You just tested daily resistance on this last 5 minute push. S&P 500's pushing towards the lows. US 30. NASDAQ is on the lows. Just be careful out there, guys. It's dangerous if you don't know how to manage risk, if you're over levered. There's just so many things that can hurt you in this marketplace. So many. That's a daily test of resistance right there. So if it fails here today, closes down here, then maybe tomorrow or sometime during the London session tonight, which it's Friday, so I wouldn't be worried about it tonight, right? Be more or less Monday. Be watching this level moving forward to see if daily closes start happening above or below that. If they keep happening below it, then more than likely this would be an area of interest for you shorts out there. For you longs out there, you got to wait on support again, unfortunately. And the last support is all the way back to there. But I think this says a lot right here as to what's really going on, right? You got under it. You even got a negative slope on it. You had clear resistance there. That's a clear break above resistance. And then boom. Yeah, that's a short squeeze. So right now, I would not be shorting resistance. I am a buyer of supports moving forward. You guys have a fantastic... Oh, wait a minute. Let me answer just a couple more of these questions. For crypto people, this guy's just giving so much juice because he explains everything from perspective of liquidations instead of their triangle support. Yeah, I mean, you don't want to be a pattern trader, guys. That stuff doesn't work. There's so much stuff going on inside of this market. Don't you think that if it was easy just to be a seller at Head and Shoulders, that you would be a trillionaire by now? Or a buyer of a bullish pennant? Or what is this guy? I got Sean. Sean is always loving to show me other traders' perspectives. I don't know why, right? Like this guy here, I don't know this guy. I don't care about this guy. I trade my own advice. I don't trade his advice. Like I don't know why. why he wants to give me other people's stuff like this. Don't trade this stuff, man. This stuff doesn't work. Right? You know how many bullish megaphone formations that have failed in the past? Like, if it was just that easy right here, why isn't everybody rich? Why isn't everybody rich? If it's that simple, if that's it, why? Like I said, I don't know this guy. I don't know what he's doing. He's got a website. He's got an affiliate link, which ain't bad. I mean, I have an affiliate link. I can understand. He's a content creator, right? I'm creating content, but you can clearly tell I'm not a content creator. Or not a very good one. But what I am and what I do is help. Honestly. And you don't have to pay for anything to get it. I give it away for free. All you got to do is watch the videos. All you got to do is watch the videos. Everything is gone over in them. So yeah, I can do my best to try to help you. And when we find trade setups that are like good ones, like this morning when I start a session out, if I'm confused, like this morning, we got the markets all over the place. Nothing is really giving a good, clean, clear signal. Those days, I'm not taking a trade. I'm not going to waste money and blow your money at the same time when it's not clear. When we get clear signals, that's when we like to take our entries. Clear signals. Low volatility is the best time to take those signals, right? When the market's not chopping left and right and moving 10 and 15% in a day. Yeah, it'd be nice to be on the right-hand side of that trade, but I mean, this was a clean, easy signal to take. Very, very clean, very easy. I mean, that's support. And it held. And look where we are now. So we really don't have to do anything. Just watch the P&L just get bigger and bigger and bigger. Instead of trying to short this top or shorting this top, then shorting this one, then shorting this one, because they all failed ultimately. Can you make money though doing it? Yeah, as long as you're taking profits inside of that day. But the videos explain pretty much everything. Everything that I'm doing. These are the areas that you're looking to take entries. Here or here. If this area fails, and you'll know it fails just by watching lower time frames, but not a 5-minute time frame either, right? 4-hour hourlies, those are the time frames to watch. This is your open. That is also yesterday's close. Yesterday's close was bearish. Therefore, that is support until you close a daily under it. Then that support will have been broken and you will have to wait for another support to be formed and respected. Once that occurs, then you can look for bullish entries. But you don't want to be on the bearish side of the trade right now. Your weeklies are showing you the direction of the market. And they're showing you that in haste with size. So right now, where we stand on Bitcoin is there's a big area that it just took out, which is August's high. And on a monthly closing basis, the next liquidity pool is all the way up at 31,964. So in order for us to even begin to target that up there, we would need to at least see a monthly close above this. And then even with that, we know that that could still be a trap because traps exist. This was a big one here. Very big trap. Because it took out monthly support, closed under it. That meant bears were searching for this target here. Look what happened. That is a squeeze of epic proportions because you have retail shorters trying to short in here at the lows. Not only retail, that's big money. Right? That's a lot. That's a big move to the upside. A lot of people were stuck. Therefore, you got a nice big continuation. So we need to close above this in order for this to be our next monthly target. But like I said, there are two more weekly targets that will come before that. And then if you drill down even into smaller time frames, you're going to find daily targets. Each day's high has the potential to be a liquidity grab. Each day. This day, that day, that day, that day. All of those wick highs have the to be target potential. So we got to watch, see how today closes, and then we got to see how the market reacts down here at support. We don't want to see the market reverse here, lose this support. Otherwise, it's going to look more and more like the market's going to want to come back down here and test this low. And naturally, we don't want to see that, but because we're bulls ultimately. But it can be a reality for sure. As long as this inflation, sticky inflation narrative persists in the news, you're going to have people be bearish. ES pulling back. Yeah, the markets are definitely doing different things. Definitely doing different things today. The Dow is pulling back, but it's not pulling back nearly as hard. It's more choppy than anything. But you're down over 1% on the NASDAQ. And you just made a fresh daily low as well. So the NASDAQ could be looking to take out this swing low right there. What is that on a weekly? Is it a main weekly low? It is. It's last week's low. But remember, this thing has a lot of room it can pull back to before algos and bots start to fire back up to the buy side. But just as far as liquidity goes, after you take out this low, a weekly closure under that, next bearish targets coming would be looking for potential moves down to there. And you've already gotten above that with the moving average. So it just depends on how we close out today. Today's Friday. So today we'll decide whether or not this week closes bearishly or bullishly. Because your open is just right here. Intraday, you just need to close above 12,292 to close the week out bullish. Right? To close the week green. You just need to close above this right here. Can you give your thoughts for long entries in UNG? Is that a stock or is that a... I don't know if it's a stock or a crypto. I'll look at it. It is a stock, but was that Brian that asked that? No, Pedro. Natural gas looks bad. It's being sold off for a reason. This is pure selling here. This isn't so much of like, even as far as the liquidity run goes, this thing, it's like at all-time lows. I don't see, like, I would stay away from this. There is an overall fundamental driver that is driving this excessive selling. This is selling at an excessive rate. So I don't have any buying levels for this. This was your last support. You're trading well under it. And since you have so much bearish momentum going on here, you're not... What you would have to wait on is you would need to wait on at least weekly divergence to even start looking for buying opportunities. And in order for weekly bearish or weekly bullish divergence to start happening, you're going to have a low happen, then a lower low on price, but a higher low on the oscillator. Once you get that, that could ultimately be the lowest liquidity run for a while. Then you could potentially start looking for bullish entries, but you're trying to buy an asset that is clearly bearish, making fresh all-time lows. and wintertime is over. I do know that a lot of people use natural gas to cook on, but I mean, I don't know enough about natural gas or the fundamental outliers with natural gas. But as far as technical analysis to give you an entry on this, you got a long time to wait. A long time to wait. I don't want you to be a buyer, even it like, because right now you're showing signs of potential divergence. It's very small. So like as of right now, if it closes today at 779 or higher, you will have the first hint or whisper of divergence. But I would wait for like what occurred on Bitcoin to happen before you start even thinking about buying it. See, Bitcoin had massive divergence that took time. No matter whether if you use the lows or the closes, this is calculated on the closures. So use a line chart when looking for divergences. Okay? Don't use the candlestick chart lows. Use the line chart lows because this is calculated on the closures. But you can clearly see how Bitcoin was making lower closes on price, and that divergence was here. You see that? So on this close right there, November, that's when I would have started looking to be a buyer. Right? That's when I would have started looking to be a buyer. And we do have video recorded evidence where I did take the low buy on Bitcoin, where we bought this right here. And I want you to look at where that divergence plays out. Plays out here. I waited for the next liquidity run, which happened right there. And I bought it right there. Boom. I could still show you that actual position, but I fat fingered the order. I screwed the order up. I thought I was taking a long trade on another account on a day trade one day, and I ended up bringing the cost basis from down here to up here. So I can't show you the physical open position now of where I took the long right there, but I do have it recorded somewhere because we took the position live. I don't know if it was in the Discord or if it was on the public or on the public channel, but we bought this and it was explained why on the day that I bought it. I told everybody I'm buying it here and why I was buying it there. Also over here on Twitter, I posted it, making a meme out of it, like the Sixth Sense. There's that I see dead people meme. I just don't remember where it was. Right here. I was memeing it on November 21st. I see divergence, right? November 21st. That was on this day here. So, I mean, I literally tweeted on the day that we took the entry, but it wasn't based on the divergence. It was based on the weekly divergence and also this liquidity run right there. This was the lowest low for 2022, and we bought the liquidity run. Ended up being a fantastic trade. And like I said, I would be able to show you that position, but I screwed up one day and accidentally took a long on the account that this long was on, so it ended up bringing the cost basis up. So I ended up just closing that out and reopening the position, the long positions on the first day of the year. On the first day of the year. And I also tweeted that out as well. I'm going to buy Bitcoin on the first day of the year. And we look to buy at support. So right there, 16,530 is my entry. And I can show you that entry. Give me 1 second and I'll show you that entry. How am I gonna do this? Let me see here. Right there. 16,541 spot 50. Now that position has been closed out mostly. Or, profits have been taken on the way up, obviously, over and over and over again. So there's just not much money left open on the position, but I'll hold the position as long as it keeps going up. And I also have a USDC account that has that same open position, but like $10 higher. 16,531. I opened it up, all three accounts on that day. So I mean, it's not just a meme. As a matter of fact, it says that the position ROE is up like 5,000%, but it's not. Like, I'm not up 5,000% on the trade. Like, there's the ROE of that current open position. 5,678%. Yeah. No, I'm not up 5,678%. No, not even close. But yeah, I would wait for at least weekly divergence, bullish divergence on UNG before being a buyer, because you're getting ready to come into the summertime. And as far as I know, in the US, in the summertime, people don't use a lot of gas to heat their homes in the summertime. So I don't know. I don't know enough about it, but there isn't any technical reason to enter UNG yet. I mean, other than you gapping down, making a fresh low. But this could also have something to do with oil just in itself. Here's oil trading today. USO, look at the big gap down. Yearly opening range. This thing's been chopping around. Eventually, I suspect it will start to trend in one way or the other, but as of right now, it's making it very difficult to position myself on it. So I'll probably have to wait for either a liquidity run to this low or something else. I don't know yet. We'll see. I figured for sure oil would catch a bid on a China reopening, but like everybody else, I am wrong occasionally. I don't make right calls 100% of the time. We do it a lot though. DXY coming off pretty hard. That's what I want to see. I want to see the DXY reject right there. But I also want to position myself long on the euro if that's going to happen. So once again, and we'll close it out here. I want to be long euro because the overall trend is up still. It looks like it's bad. It looks like it's failing. It looks like the trend is busted. But as long as support is holding on a weekly closing basis, I am looking to get long this asset. Looking for another expansion up to like 110, 112. All right. You guys have a fantastic rest of your day. We will see you again on Tuesday. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.